Casually Explained just released a video explaining people that are into the stock market, which is obviously you and me. So of course we gotta react to it. And if you don't know Casually Explained, they're this really popular YouTube channel that explains a bunch of random topics in a short and funny way. Now before we get into this video, as always, if you wanna see how we trade, myself and all our Fallible members, make sure you check out this free training. There's a link in this video and down below in the description and comments. It'll show you exactly what we do so you can get profitable right away. Now let's get into this video.
One of the reasons I love the stock market is because it really gets down to the core of what I think life is all about. Making as much money as humanly possible with complete disregard to everything else.
Which is of course why we got into the stock market, right? I mean, look around me, all this luxury. I'm surrounded by vast riches, wearing the finest silks. I have a literal palm tree growing inside my house. How many other people can say that? That's what the stock market can do for you.
Now, while I'm sure philosophers might eventually be able to come up with a reason why this could be bad, one reason why it's good is because it rewards business models that work, punishes ones that fail, and encourages competition within an industry, which often leads itself to innovation and getting customers better products.
Oh yeah, that's the theory of the stock market and capitalism in general, but what do you and I know? We know that when you have a Federal Reserve like the one that Powell is running that's constantly printing nonstop, well then the market's gonna get a little distorted because every company can get as much money as they want regardless if they're profitable or not. So it's not exactly the good companies being rewarded and the bad companies being punished and going out of business. Well, not right now anyway. That's why we currently have the highest number of zombie companies ever in our economy as of right now. And zombie companies are companies that can pay the interest on all their debt, but they're never able to pay down the principal. So they're just crawling along, dying, a slow death. And the only reason they're able to stay alive this long is because, well, all the money that's being printed, all these companies can have access to it. And so this is the reason why we have booms and busts in the stock market and why it's not perfect. During the booms, you get a lot of good stuff happening, but you also get a lot of rot building up. So all these companies that I'm talking about that don't make money. So all that rot builds up, and then in the bust, it's supposed to clear out. But in our economy, where all the politicians want to keep things as good as possible for as long as possible so they can get reelected, everything just gets papered over. So that rot keeps building and building and building until you get a huge bust. And that's when you're looking at the Great Depression type scenarios. And that happens once every 100 years or so. So yeah, the stock market isn't perfect, but it is what we got.
As an example, take a look at the craft beverage industry. It used to just be big companies like Nestle selling tap water at a huge markup, but now we have Belle Delphine.
Oh, and if you didn't know, you could buy Belle Delphine's bathwater for $30 a bottle. It's for those guys that are really thirsty. And maybe some girls too.
So, while the stock market either goes up or it goes down, the ways you can lose money on it are nearly endless. So you notice that different types of people like to trade in different ways depending on how they are in real life.
And we know that's what the stock market is for 99% of people involved in it, right? You make a few good trades, a few horrible trades, and at the end of the day, you end up with less than what you had, usually a lot less. But hey, at least you got some time pass out of it, right?
First of all, we of course have the investor. This is your classic older guy who knows a thing or two about the stock market. Like literally one or two things. And those two things are time in the market beats timing the market and dollar cost averaging. If they had to get a tattoo, it would say, buy the dip, but they would never do that because tattoos are a sin.
The funny thing about investors is how much they go back and forth between being investors and traders. If their stock goes up and they like it and they sell a bit to take some profits, they're traders. But if it's going down and they don't want to cut their losses like they're supposed to, and instead they buy more and call it dollar cost averaging, saying that they're investors holding for the long term and they really believe in this company. Sure, you can be an investor in that scenario. I believe you.
Next, we have the boys of Wall Street bets. These are your Zoomer and millennial degens looking to get rich or take physical delivery of 50,000 barrels of crude oil trying. They trade almost exclusively options, which typically results in them making several times their original buy-in in a matter of days, or straight up losing it all.
Everybody loves options, and that's just because they move so fast. They're more volatile than your normal stock. A general rule of thumb is that people are going to be more interested in anything that's moving faster, because if it moves faster, then it's more casino-like, and that's more fun. That's why crypto trading became so popular, because there was a bunch of volatility. So people ask me about options all the time, and I tell them you don't actually need them, because what most of the people trading options don't realize is that you're not betting on just the direction of the stock anymore. Like if you buy call options on Apple, you're not just betting that Apple goes higher, you're also taking a big bet on the volatility of the stock, meaning what is the path that it takes to get there, because you got to time it properly. It needs to get there within the next, say, 90 days, depending on what option you bought. So that extra volatility factor that you have to deal with in options that you don't have to deal with in stocks makes it way more complicated and even more people lose in options. Really, only the pros are making money in options, and those are like the market makers and the sharps. And they're taking money from all the guys on Tasty Trade. So you don't really need options to make money in the stock market or any market. But of course, volatility is fun.
Another subset of options traders is Theta Gang, a community based around selling the contracts to the previous group. Their profits are consistent, but low enough that no one really cares. Their primary gains being the feeling of intellectual superiority when using terms like iron condor, calendar spread, IV crush, and gamma hedging.
That's another thing about these options traders, Theta Gang or whoever. They are the #1 mental masturbators getting off on complicated words. And that's the thing, if you're not in the stock market for your own personal casino that you could access anywhere, then the likely other reason that you're doing it is just to show off how smart you are. Back in the day, you used to invest to brag about it at cocktail parties, but nowadays it's just, to post on Reddit.
Next, we have your silver bugs and gold bugs. These are the guys looking to keep their money safe. So safe that once some guy in Africa digs it out of the earth and sends it over, they dig a hole in their backyard and put it right back in.
It's funny because Warren Buffett made that exact same joke. He said gold gets dug out of the ground in Africa or someplace, then we melt it down, dig another hole, bury it again, and then pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their heads.
This investor is most often associated with the prepper community, who are anticipating the coming apocalypse and have their shotgun shells and seed collections ready to go in their underground bunker. Not all gold bugs are this extreme, however, as my dad would simply describe himself as waiting for the great undoing of the world financial system and the collapse of American empire.
I love these guys because they are just so confident that they're going to be just fine when we hit Mad Max-like conditions. Because they got their bunker and their guns and their seeds, no problem. Sure, the world ended, but they were prepared for it. As if you could truly prepare for something like that. Me personally, if something like that happened, I would just give up. I mean, no Netflix, no DoorDash, no Call of Duty, no thank you.
Very similar to your gold bugs, you have the people who are into cryptocurrency. These guys are similar in disposition, but generally younger and less doomer. They don't keep gold or silver in a vault in their basement because that's where they live, kept warm by enough GPUs to melt Greenland. They're absolutely loaded, but never buy anything because if they sold Bitcoin for US dollars, that would imply Bitcoin isn't a real currency.
Yeah, they're not as bad as the gold bugs, but they're still all about Bitcoin because everything else is just fiat money. It doesn't matter. Bitcoin is the thing that's gonna survive. Well, if our fiat system breaks down around the world, then we're gonna have way bigger problems than what Bitcoin can save us from. I don't know why these people think a major transition into this new digital currency will be so easy, and everyone should do it. And also, good luck preserving your wealth in something that fluctuates way more than any of these fake fiat currencies. I mean, do you really want your net worth doubling and then getting cut in half all within a few months because of the currency that it's kept in?
Penny stock speculators. If options trading is the casino, then penny stocks are the scratch-offs. If there's the wolves of Wall Street, these are the sheep. And you might be thinking, what? No, I'm not a sheep. But bro, it's in the movie. Literally that's what the movie's about. If someone posted a thread on Aerotine with a few rocket emojis, you'd put down 3K in an instant.
Penny stocks appeal to the lowest form of traders that only understand small numbers. They're the guys who think it's better to get 1,000 shares of something at $1 than 1 share of something at $1,000, as if they're very different. Because more shares is better, right? Yeah, good luck to the penny stock traders.
Quants. These are the MIT graduates with 3 PhDs who work with 20 other math geniuses on a specific machine learning algorithm in order to front-run the quartz crystal in the Chicago Mercantile Exchange's internal 24-hour clock by running a fiber optic cable that's 14 feet shorter than the closest competitor, thereby reducing the distance light has to travel so he can arbitrage a 1/4 cent profit per bushel on soybean futures. He makes $500K a year, but secretly dreams of owning an acreage and holding a soybean in the flesh.
Quant, in my opinion, is actually the way to go in the stock market. Not so much front-running everybody else, but finding a good edge, back-testing it in the market, and building a good system. And then executing that system over and over again. That's the type of strategy that we talk about in this training. It's all quant-based.
The security analysts. These guys are the very detail-oriented investors who are always out to find a good deal on an undervalued stock. Their biggest weakness is not being able to bring themselves to buy Apple, even though it's outperformed their entire portfolio for the past 10 years.
Have you ever been on Seeking Alpha? These guys spend thousands of words trying to explain why a stock should crash while it just keeps climbing higher day after day. And the rest of us are like, oh, it's going up. That's probably a good sign. Let's invest. And then we all make the money. But the Seeking Alpha guy, he did get 150 page views, so who's really winning?
Of course, we can't forget, last but not least, Wall Street. This is your investment banks, hedge funds, and money managers. Big money, smart money, whatever you want to call it. Now, what most people think Wall Street does is this. Looks like Daryl from New Hampshire just bought $15K worth of Delta Airlines. Oopsie daisy.
Oh no, the real power of Wall Street isn't the algos they could use to front run all these guys. The real power is the numbers that they have in their phone book. Because every time they do something, whether they cause a financial collapse or just have their own bank going out of business, they could just call the government to bail them out. That's the real edge of being on Wall Street and having that big money. You're too big to fail.
But what they actually do is this.
Bring, 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 bring.
Hi, this is JP Morgan Client Services.
Hi, can I buy $15,000 of Delta Airlines?
Yeah, sure. There's a $5 service fee.
Well, that's fine.
Can you imagine paying money for trades? Or calling someone to trade? Come on. All the best brokerages like Robinhood make sure that 0 people can ever contact them at any time. Even when their servers are down and your money is stuck in a stock that is collapsing. Still can't call them. Now that is good service.
Okay, it's done.
Thank you.
Beep boop.
Hello?
Hey, Lehman.
Yeah?
Want to write one too many zeros on a piece of paper?
Sounds getting lit, bro.
Gotta love the big bank manipulation, don't you? Anyway, Casually Explained gave us another great video. I enjoyed it. Very true in a lot of parts. And don't forget, if you want to learn how to actually do well in the stock market, because 99% of people don't, then check out our free training. Link in this video and down below in the description and comments. And if you haven't already, make sure you subscribe to this channel so you can see all our new videos. Do that, and I'll see you in the next one. Stay fallible out there. Bye.